Hey viewers, you're watching the Savera and I'm Vidhi Joshi. The Indian rupee breached the psychological $90 mark for the first time today, hitting an all-time low of 90.15 against the US dollar in every trade amid concerns over the long delayed India-US trade deal and continued foreign investor outflows. The rupee opened at 89.91 and quickly weakened to the record intraday low, surpassing its previous all-time low of 89.9475 set just a day earlier. It later recovered slightly to trade around 90.09, down 6 paise from the previous close of 89.88. The currency's sharp decline has been attributed to a combination of factors, including persistent uncertainty over the India-US trade agreement, rising import costs, and subdued intervention from the Reserve Bank of India. Analysts noted that record-high global metal and bullion prices have inflated India's import bill, while steep US tariffs continue to weigh on the nation's export competitiveness. Import-heavy sectors such as mineral fuels, machinery, electrical equipment, and gemstones have been particularly affected, contributing to weaker investor sentiment. Traders also highlighted sustained buying of dollars by banks and continued offloading of Indian equities by foreign institutional investors as key drivers behind the rupee's depreciation. Market participants are closely watching the Reserve Bank of India's policy announcement scheduled for Friday, which is expected to provide clarity on whether the central bank will step in to stabilize the currency. Technically, experts believe that the rupee is deeply oversold, and a recovery above 89.80 would be essential for any meaningful rebound. Meanwhile, domestic equity markets reflected the pressure on the rupee, with the 30-share BSE Sensex dropping 165.35 points to 84,972.92 in early trade, and the 50-share NSE Nifty falling 77.85 points to 25,954.35. Analysts warn that the rupee's breach of the 90 level could trigger further weakness if global conditions remain unfavorable and flows into domestic markets do not stabilize. Despite the steep decline, a weaker dollar index and falling global crude oil prices provided some cushion against a sharper drop. At the interbank foreign exchange, the rupees opened at 89.96 and slumped to a record intraday low of 90.15 before recovering marginally to trade at 90.02, down 6 paise from the previous close. Experts suggest that the rupee's depreciation could halt or even reverse once the India-US trade deal materializes, though the details of tariffs under the agreement will play a crucial role. They also caution that a potential rate cut by the RBI could invite further selling of the rupee, while continued FII outflows are likely to keep the currency under pressure in the near term. On Tuesday, the rupee had settled 43 paise lower at an all-time closing low of 89.96, driven by short covering by speculators and sustained imports demand for the US dollar. Nationalized banks continued buying dollars at higher levels, with deals reportedly taking place at 90.0050 after market hours. With the MPC meeting underway and the interest rate decision set for December 5, market participants are preparing for a crucial week ahead of the US Federal Reserve's decision on December 10. That's all for now. Stay tuned to the Savera for more updates. Do like, comment, and subscribe to the channel.